Welcome, everyone, to the Databricks webinar, Unscripted, real stories from the industry on how they're driving growth with data and AI. I'm your host today, Kim Hatton, and I'm going to be moderating today's session. We're excited to bring together industry experts to share actionable insights on how banks and insurers are using data and AI to drive real business growth. Our webinar goals are simple. We're going to highlight some thought leadership about financial services using data and AI and how they're using that to drive their business. We're going to provide some insights into how people can actually leverage Databricks for hyper personalization, underwriting, or actuarial transformation. And finally, we're going to offer some clear next steps for implementing data driven projects with Databricks and our partner ecosystem. Today's call, we're going to start with an overview of the agenda. We've got about 60 minutes on the table to bring all these insights to you. And our first talk is really going to talk through how you're going to be able to unleash this growth with innovation technology. We've got Roshni Joshi and Mimi Park, my fave colleagues, who are going to bring some insights about what at Databricks is new and how you can get started. Next, you'll hear direct insights from Thrivent and HSBC on how they're driving industry growth in both banking and insurance. And then finally, we're going to close with my pal Antoine, who's going to talk a little bit about the Databricks ecosystem and how you can kickstart your initiatives. Throughout this call, we really want to hear from you. At the back end of the call, we'll have a survey. We would appreciate it much if you'd stick around to fill that out. But also throughout the call, we're going to have some interactive tooling. So please feel free to use the chat. All of our speakers are on and are going to be able to respond to your questions is live in real time. And throughout today's event, please keep an eye out for any new insights or key takeaways. To start with our engagement, I want to kick this off by asking you all a couple questions. Speaking of which, we have some data and AI use cases that we've seen across the industry, specifically in banking and insurance. If you could go ahead and scan the QR code and let us know what's top of mind for your organization when it comes to how you're leveraging data and AI. For more inspiration, please check out the responses with our financial services blog listed in the links below. You'll hear and see what others kind of thought when they thought about their use cases with financial services and how they were actually going to be able to get started. Our first presentation features two leaders from Databricks. Roshni Joshi, who's a general manager of North America Financial Services Field Engineering, and Mimi Park, one of our data leaders. Together, they bring decades of experience in financial services and data driven growth. Roshni is celebrated for her industry curiosity, on the job, and I will attest to this in bar fitness class. Mimi is famous for turning data into action and curating the perfect office playlist. Their insights will set the stage for unleashing growth with innovation technology. After Roshni and Mimi share, we'll pivot to hear directly from our industry leaders at Thrivent and HSBC. Now, Roshni, over to you.
Thank you, Kim. And hi, everyone. My name is Roshni Joshi, and I lead field engineering for our financial services segment for Databricks in North America. Joining me today is Mimi Park. Mimi is a senior technical advisor for all things financial services and AI at Databricks. I wanted to start off with a thank you to all of you for joining us today and for more importantly, being our valued customers and partners. The audience today probably represent a cross section of many different sub-industries within financial services across many different companies. And I wanted to kick us off with a little bit of an introspection with the following question. Are all of us building a lasting organization? And I ask the question because if you look at the longevity of a company on the S&P 500, the average longevity has been declining over the last many years. About 80 years ago, it used to be 67 years. About 60 years ago, it used to be 35 years. And now it's about 15. Research shows that at the current churn rate, about half of today's S&P 500 firms will be replaced over the next 10 years. And therefore, I go back to my questions. Are you am I? Are all of us building our organizations for longevity? And are we building lasting organizations? So, what is it that makes a company a lasting organization? Well, the disruption trend is driven by four key things. Number one is disruptive technologies. The product development lifecycle over the last 10 or 15 years has shifted significantly where we are doing daily deployments now for those companies that are ahead of the pack. Number two is increased competition that is challenging the large incumbents. Number three is a significant amount of M&A activity that leads to corporate restructuring and consolidation. And number four is a shift to all new industries, transformational changes that are occurring across sectors like energy, media, and of course, financial services. Um, if we look at occupations and how they have shifted in the US over the last 80 years or so, there was a research done by economist David Otter and his colleagues, and they looked at 35,000 jobs across all categories. And they found out that across all of the jobs in the US, 60% of today's workers are employed in jobs that did not exist in 1940. That means you and I have jobs that didn't exist before. This implies that 85% of employment growth in the last 80 years is explained by the creation of technology driven roles. So, technology has had a significant impact on roles and job creation industries in the last 80 years, and it continues to do that with AI. Goldman Research looked at 900 different occupations at a task level, and they estimate that two-thirds of US occupations, 66% of US occupations going forward, are exposed to some degree of automation by AI. But then when you look at enterprise use cases, some stark realities are as follows. Only 10% of organizations are adopting AI at any scale, and we see that every day at Databricks. MIT says in their study that was released 2 weeks or so ago that 95% of AI pilots fail. And they fail because generic tools excel for individual use cases. But what we need for enterprises is enterprise tools that adapt to enterprise workflows and learn on enterprise data. Therefore, for our enterprise use cases, especially in the regulated industry, we must have a platform that adapts to our use cases, that learns from our data, and that is available to all of our users. Because all of our jobs have the potential to be augmented and automated by artificial intelligence. And that has been our mission statement at Databricks for a long time, which is to democratize data and AI and make it available for all users, regardless of your technical skill level. We want to build a platform that is open, that is unified, that is available to all users, regardless of your technical skill level, and is available to be used by data engineers, data scientists, as well as business users. For us, democratization of data means anyone in the org can ask any questions of data, and we've removed complexities, any kind of complexities, knobs, and made everything as close to self service as possible by infusing AI into the platform. Democratization of AI for us means that data teams should be able to leverage AI that can reason on the company's data to ask those insightful questions. So we really look at democratization of data and AI through a unified platform that is open and that is available and accessible and useful and simple for everyone to use, built on enterprise data intelligence and enterprise data, not just general intelligence and general data. And we are already seeing this with our customers. Our customer block says 40% of their employees across multiple different functions, from sales to marketing to operations, are using Databricks as their platform of choice today. And they've seen up to 30% productivity gains. So building a platform is great, but how do we make sure that our customers within the specific industry that we serve, financial services in this case, are leveraging our platform efficiently and they're ready to use with the minimum amount of friction? So we started looking at three pillars that most companies spend their dollars on and effort on. Number one is cost efficiency and cost savings. Number two is reducing risk. And number three is driving growth. If you look at anything that any one of us is working on, it's in those three pillars. We are either driving growth or reducing risk or driving cost savings. And then we looked at individual use cases within each one of those pillars. And then we looked at ways in which we can accelerate it through reference architectures, through integration of third party data sources, through ready to use demos that we can show you that can show you the art of the possible, through accelerators that are driven by some of our partners as well. To talk more about this, I'm going to ask Mimi to take over and talk to us about trends and use cases and how financial services institutions that she works with are unlocking the value of generative AI and agentic AI. So, Mimi, talk to us about banking and insurance and how customers of Databricks and banking and insurance are driving top line for us using our platform.
Thank you, Roshni. That really put things into perspective. And you hit the nail on the head because today, everyone, and when I say everyone, I mean your competitors, your partners, even your customers, has access to the same foundation models and AI tools. Competitive differentiation now comes from how effectively companies blend their proprietary enterprise data with the general intelligence that these models provide. This is exactly what Databricks customers are doing today. They're operationalizing AI at scale, using their data to directly impact their business processes and customer experiences. For example, we're seeing banks and insurers use hyper-personalization to deepen customer relationships and unlock new product adoption. On the investment side, firms are turning to our platform for intelligence that gives them an edge in spotting opportunities before their competitors do. And how are they doing this? The big unlock is the agent mesh, a network of specialized agents that can act, collaborate, and learn in ways that a single model can't. So you might be wondering, what exactly is an agent mesh? An agent mesh is a concept where multiple specialized agents are interconnected in a flexible dynamic network. Instead of having a single monolithic AI agent that tries to handle everything, the mesh allows many smaller, purpose built agents to collaborate, exchange context, and complete complex tasks. Agent meshes are the corporate version of the vendors. Each agent has a specialty, but together they tackle complex challenges while minimizing costs because you can reuse these agents across different use cases. So let's look at how agent meshes look like in action for a hyper personalization use case for a hypothetical customer, Zenith Financial Bank. You can think of it as a three-member team made up of AI specialists working for you. One agent knows the customer inside out, including their latest call center interactions. Another knows our available product lines and competitive products. Another can execute actions like creating and sending a pre approved quote. So, in this workflow, I'm a marketing professional creating personalized campaigns to optimize conversion. But I want to have a human in the loop type of experience where I can guide it each step of the way. I'm going to start in the data intelligence dashboard where I can consult my customer service agent where my marketing opportunities lie. I'm going to ask a question. What are the key products mentioned by our customers? The customer service agent queries customer transcripts in my company's database to recommend the following ideas. The investment and retirement services opportunities, such as 401k options and IRAs, catch my eye because I already know this is a strategic growth area for our company. So now I'll ask this question. What kind of campaign and benefits can we call out around investment and retirement services? Since our retirement product is new, I want to create some messaging around fee transparency and value. The agent advises that a campaign focusing on competitive pricing, expertise of the financial advisors, and the comprehensive nature of the services offered. So now that I have my strategy, I'm going to go to my campaign agent where I can design an email copy and actually launch the campaign. So I'm going to make a few selections. Low fees, convenience, and exclusive access. You change the name of the campaign. And I'm going to ask it to generate a marketing copy for me. So looks like we have a very nice email template here. And it's made the call outs to all of the features that the customers are asking for. I like the email template. So I'm going to go ahead and ask the campaign creation agent to pull the list and go ahead and send the email. So it advises that it has sent the offer to 210 customers in the Retirement Planner Summit. So as you can see, bringing together multiple agents has helped me significantly reduce the time in my personalization and marketing campaign workflow. The key enabler in the agent mesh architecture is Unity Catalog, which enables fine grained security controls across use cases and users. By governing who can access what data and which actions at a very granular level, the mesh can safely repurpose the same agents in different contexts. That means that one KYC or Know Your Customer agent, for example, can serve onboarding, underwriting, and compliance use cases, but always with only the permission scope to that specific need and user. So, in summary, the biggest growth opportunity isn't one giant AI model, it's a dynamic ecosystem of specialized but connected agents working together to win customers and close deals faster. Databricks is the most safe, governed, and end to end platform to make it happen. So, thank you for letting me share this vision. Kim, I'll hand it back over to you.
Thank you, Roshni and Mimi, for sharing your insights on how growth and innovation can be achieved with the right tech stack. Now, I'd like to hear from our industry leaders at Thrivent and HSBC. Starting off our customer spotlight, we've got our guest speaker, Mandar Purohit, who is the Director and Client Data Modernization at Thrivent. He's going to share how Databricks has unlocked new insurance capabilities. Mandar, take it away.
Hello, all. Good afternoon. My name is Mandar Purohit. I'm leading client data modernization and data consumption strategy at Thrivent. Thrivent is a financial services company that puts generosity at the heart of saving and investing. We help build, grow, and protect financial well being through purpose driven advice, investments, insurance, banking, and generosity programs. Thousands of Thrivent financial advisors across the country serve individuals and families who are planning for the future, establishing legacies for their loved ones, or making their communities better. Working together, clients and advisors create a financial plan that reflects their values and helps achieve their goals. At Thrivent, we believe money is a tool, not a goal. By deeply embedding data and AI, we are making a personalized and meaningful guidance as a norm, not as an exception, but and ensuring our clients always feel heard, valued, and prepared. So one of the challenge that I'm going to cover as part of this talk is that typically in an advisor-led industry, the challenge that we have is advisor bandwidth is stretched thin, risking missed opportunities and fragmented service in any of our product offerings. So our opportunity was to leverage data and AI to unlock a better capacity and effectiveness to help drive holistic growth across all of our segments. So what are our four strategies that we are using for our advisor effectiveness and overall holistic growth? We focused on high value engagement. Then we looked at how do we best place the products. Then we looked at how do we enable advisors with the capabilities and learnings that they needed to provide the right advice to the clients. And finally, summing up all of these three strategies into what results can we get using all of these solutions. Let me get into my first strategy, focusing on high value engagement. Last quarter, our data segmentation or client segmentation surfaced 200,000 households facing a retirement, but either being under diversified or possibly being impacted by recent tax law changes. So our advisors built a personalized financial plan to help at least 15% of those clients to help rebalance their portfolios, driving measurable retention, asset growth, and also more importantly, peace of mind for the clients. Advanced analytics segments our clients not just by the policy type, but by investment goals, mutual fund holdings, planning milestones, and health coverage. That way, we can understand and predict emerging financial needs. With AI scoring fully integrated into advisor workflows, every outreach is targeted and engagement is prioritized for a high impact client position for a multi product adoption or deeper learning discussions. So, using data and AI, each advisor receives actionable and prioritized lists, transforming inertia into a proactive engagement and opening doors for more comprehensive solution conversations. The industry studies say that personalized outreach improves satisfaction by 30% compared to traditional campaigns, and directly tackling to that 14% needs truly met industry figure. So that's something which data and AI is helping with. At Thrivent, our takeaway was I think using segmentation, we were able to ensure a proactive and relevant touch points and help build us trust and engagement with the client that we have their best interest in mind, regardless of whatever is happening in the external environment. So that was our first strategy about using data driven segmentation to give high value engagement focus areas for our advisors. Moving on to our next strategy, we are looking at how do we get better products that fit our customers' needs. So recently, our advisor guided a multi-generational household through retirement and college planning. Data and AI suggested bundling mutual funds and annuities with an updated insurance coverage, resulting in doubling assets under management for that family and a high satisfaction score. What we are doing for this is we are using predictive modeling and AI agents to recommend optimal next steps for every client advisor interaction. So it's not only about insurance upgrades, but it's also about tailored mutual fund allocations, planning milestones, retirement rollovers, and a holistic coverage update. Suitability check and compliance also helps because client specific talking points are automated and embedded in our advisor tooling, ensuring that every conversation delivers an individualized value and regulatory alignment. The recommended algorithms that we use power more than just a cross sell. They connect clients to solutions fitting their risk tolerance, ambitions, and life context, whether it's wealth, health, or protection. Industry wide, what we have seen is AI driven next best action tools have helped advisors get a deeper share of wallet with the clients and improved close rates. This has increased new money deposits by 10% and multi product households by 20%. Learning from Thrivent perspective, that next best action is not just a formula, it is a commitment to personal relevance and measurable outcomes in every interaction. So this is how we were looking at how do we place the products in the best interest of clients, and that will resonate best with the clients to help us get better close rates and obviously get a deeper share of their wallet. So while we are doing this, I think I wanted to also talk about our third strategy, which was about how do we build our advisors to to serve better. So what we recently did was in Dallas, our team partnered with the retirement planning experts and investment specialists in a joint client workshops. So that way, we were able to leverage data to identify households with the complex needs and deliver holistic solutions, increasing a multi-product adoption and client engagement. The challenge here is not all advisors are experts in every area of our segments. So what we are doing is we are using data driven planning to map our advisor certifications, planning mastery, investment expertise, or health product fluency, or the compliance performance to look at what are our kind of strong and need improvement areas. Now, and data and AI driven insights can fuel not just targeted upskilling for a specific advisor and an individual growth, but also strategic partnership. That way, advisors can connect beyond their immediate teams and they can actually be able to collaborate with the subject matter expert through joint fieldwork and hands on learning. Retention analytics has basically provided us that I think proactive support and ensuring advisory team remain resilient and relationships stay consistent with the household with evolving needs. This is helping our advisors to do better without having to go through a classroom training every time. And so Thrivent, what we learned in Thrivent out of this is that workforce optimization is all about blending deep skill building with collaborative practices, maximizing both individual and team impact to deliver the best client outcomes in the most efficient manner. Summarizing all these three strategies that we used, one to basically address the Thrivent advisor capacity and with having a focused engagement, then providing a personalized insights to the clients, and finally helping advisor workforce to gain on the job knowledge. Using all of this, we looked at what is it that is getting us the results across all of our solutions. So, in our industry, we use certain important metrics such as vital stats and sales intelligence. And what we have looked at is looking at the performance patterns. We we revealed that advisors who adopted a multi-generational household approach, combining investments and insurance protection, outperformed peer by 10% in revenue per household. These insights quickly scaled across markets, driving a company wide lift and helping us outperform industry benchmarks. Unified dashboards deliver visibility into metrics that matter, such as close ratios, assets under management, household completeness, premium per client, and persistency rate across all of our segments. These metrics are directly elevated by the impact of smarter segmentation, actionable recommendation, and advisor development, magnifying a practice wide effectiveness and revenue potential. Critically, we used data and AI powered analytics to spot, replicate, and scale the best practices that move the needle, making it possible for every advisor and team to focus on proven strategies that maximize vital stat and overall practice growth. Industry lesson, I think, with all the digital transformation, the leaders today are the ones who are cross sharing their playbooks and optimizing incentives to drive measurable and continuous improvements. So our takeaway from this was you need a holistic enablement of our advisors to contribute to the revenue growth, and all of these strategies have combined helped us in that objective. Just to summarize again and to repeat, I think at Thrival we believe money is a tool, not a goal. But then using the above three strategies, I think we are able to get a better client trust and growth for the business. Thank you. I look forward for your questions.
That's awesome. Thank you so much, Mandar, for your insights and also just breaking it down for us on how an organization like Thrivent has kind of almost reinvented itself or lent into transforming to kind of meet the needs of customers today. And that last part on vital stats is going to be a game changer as we expect this massive generational wealth transfer to kind of take place soon for advisors to be able to see more of the household and to kind of understand what investment looks like is going to be transformational for both private but also for the customers that you serve. So, with that, I have a couple of questions for you. And as a reminder, as you're listening to this, if you've got questions for Mandar, please put them into the chat. We'll get to those as soon as we can. Building trust with tech, it kind of almost sounds like a non sequitur, right? But in what ways are data and AI helping advisors really strengthen trust with clients, turning tech into kind of this genuine like bridge that is intended to be more of a helper as opposed to just a buzzword?
Yeah, so I think there are multiple ways we achieve this. Informally, our advisors are constantly in touch with our clients, and they are getting the feedback, and we are able to kind of monitor their book of business, their growth, and but more importantly, we also have our net promoter score and voice of customer analytics, where we do send out surveys, we do send out questionnaires to our clients on a very regular basis, where we try and gather all of their feedback, including a free text feedback from them. That helps us track satisfaction, spot any service gaps, and also be able to plan and deliver timely solutions for their pain areas. And as well as advisors then look into these insights to act on that feedback and tailor their recommendations, or their increasing the retention, because when clients do see a tailored recommendation and actions being taken on the feedback, our net promoter score rises. So it's kind of a self-feeding loop if we use it right way. Also, personalization powered by the data leads to clients who feel heard, and we experience less friction, and they stay loyal with Thrivent. Given that Thrivent is over 120 years old company, that is the most important thing for Thrivent to have a loyalty and trust of the clients. So our and finally the metrics using NPS, VOC, and all others, they confirm our targeted outreach and tailored service and how that is helping our customers. So this is how we try to get the results on the investments.
All right, Mandar, thank you for answering our questions. And I've got one last one for you. You talked about Thrivent's 4 point kind of strategy and approach, but I'm sure everyone else here is also very curious about kind of how did Databricks come into or factor into your approach with a number of the implementations that you've undergone?
Yes. So, Databricks is a primary data lake platform where we have implemented and migrated all of our legacy data platforms into. And we are also leveraging a lot of native Databricks capabilities, whether it's Genie, whether it's local models that are available out of Databricks, and basically to mature our data consumption strategy on how do we get insights out of our data platform, and how that analytical outcome can help business to take their decisions. So that's how I think we are building this, and it has been a major part of our uh, kind of a data ecosystem.
Awesome. Well,
Yeah.
thank you so much for spending time with us today. It's been an ultimate pleasure. And as I mentioned to everyone else, Mandar's going to stick around. So if you've got some questions for him, please enter them into the chat and we'll try to get to as many as we can. Our next spotlight's with HSBC, a global banking and payments innovation leader. Our guest speaker, Will Turner, has decided to spend some time with us, and he is the global head of global payment solutions for innovation banking at HSBC. He's going to share a little bit about how HSBC is advancing their customer experiences and driving business growth in the banking industry, leveraging Databricks. So, with that, Will, take it away.
Thanks, Kim. I'm delighted to join today and share insights around how HSBC is thinking about data usage, the financial sector, and how I think about growth triggers, both for our customers and then for our own business. By way of introduction, I've spent 18 years with HSBC in a range of roles around the group. I've been fortunate enough to work in Asia, in Hong Kong. I've worked in San Francisco, in Europe, and right now I'm in New York. And really importantly for today's session, I sit within the business. So when Kim and I were chatting as part of our relationship, I told a very clear story and a focus I have on working with my IT, my cyber, and my data team to bring to life what we're doing and why it's important. My current role is leading global payment solutions for our innovation banking business. This covers all of our payments, our liquidity products for our emerging tech companies in the US and globally. Data is absolutely key for us and how we're using our growth triggers and how we're helping our customers to scale. I think this is important context for today, just because this is such a key focus, both for us and also for the partners we work with. So I hope some of the insight that I share is helpful for people who listen in. I'm very happy to continue taking questions through the Q&A. I'm mindful while I've spent 18 years at HSBC, to some we might just be a logo at an airport or making jet bridges to get across the world, but we're one of the largest financial services organizations. We currently support around 41 million customers in about 50 countries. So again, when we talk about complexity, scale, and business impact, we like to think if we can do it at HSBC, others can find ways that they can drive their own growth levers across the business. Our network gives us exposure to about 85% of global trade flows. So the world today is arguably more complex than it's ever been, and customers are relying on their banking providers and their advisors to find growth triggers, to protect their business, and manage through uncertainty. So we bring years of experience working with partners like Databricks to help customers realize their ambitions and their growth triggers. Specifically for payments, and some of the stats are on the slide here just for a bit of context, we make about 180 payments a second for our customers around the world, domestic and international payments. And our balance sheet is about $3 trillion. This is where we help customers and consumers around the world achieve their ambitions and scale. That's all about HSBC specifically. I thought I'd touch a little bit, just for those listening, around the banking industry. And there's four core themes that we're seeing at the moment, and we've leveraged some resources at the bottom where sources are included from insight from McKinsey, IBM, and others. But we're effectively seeing four facets across the industry, not specific to HSBC, but I thought they might be helpful as you, as listeners and joiners, think about your own growth strategy. So first, has and continues to be a reduction in productivity across the banking and financial services industry. And at times we think scale and technology unlocks productivity, but we found some insight that actually talks around a 4% decline in productivity of some of the teams because of scale, bureaucracy, and some of the challenges that we face operating in today's business climate. Unsurprisingly, we and others are looking at AI for growth triggers, customer journeys, and to protect the institution. We, like many, have been using AI for decades, but we're seeing a significant focus on education and awareness for our customers. And this requires the data and the intelligence and the platforms we have to be surfaced to users in a clear, concise, and transparent way. I think it's fair to say across most organizations, senior leaders are more ambitious on some of the opportunity as opposed to some of the frontline workers. So like many, we're really focused on bringing them along that journey. And customer is at the heart of everything we do. I know many say that, but truly here after 18 years, I see it about everything we design, we build, and we support. So we're spending a lot of time on our front end systems. I think it's fair to say in a prior decade, you could do certain things in certain jurisdictions, but you now have a real theme of borderless banking. Customers expect a similar experience and a product usage journey across the channels. And they have customized expectations on personalization of internet banking channels, of mobile app journeys, of payment screens, of loan journeys. And they expect banks and other providers to surface that insight in a way that they can easily understand and find value. And the last perhaps might surprise some people, but for me and many in the industry, open banking is a consistent driver of innovation across the industry. And I'll touch on this later on, but you've got different markets that have embraced open banking in different ways. Firstly, what is open banking? To those who aren't aware, it's effectively a consent-led data sharing protocol. And different markets and geographies have approached this at different paces. So if you look at something like Australia, you've now got 99% of consumers very comfortable with sharing their data with third parties to drive better outcomes. The UK, having worked there for several years until recently, have built a government-led approach to enable data sharing under common API standards for consumers and businesses. And then 12 months ago, I landed in New York, and I think it's fair to say in the US, it's a slightly different approach. It is not today a regulatory driven approach, but you've seen fintechs and banks innovate across their propositions to bring journeys to life that help customers manage their financial health, their growth triggers. And this is a key enabler for payments and transaction banking as we're seeing future engagement with customers. Next, I'd just like to share some of my perspectives on strategic growth. And I was lucky in a prior role to have this in my very job title for our UK business. So just to expand on this, we think around innovation and growth in many different bits. And at its core here, for me, we've got a real focus in our team around where customers are today is one thing. We have to understand that there are customers that have chosen us for a reason. But I get really excited thinking about what customers do next is everything. We use this on our slides, and a lot of firms talk around customer centricity and it being core, but truly after 18 years here, I can see that it feeds into everything we drive in our product innovation, our customer coverage, and our digital channels. So I'm shortly going to cover 3 slides, but I just want to stress without these 3 underlying slides around strategic growth, resilience, and innovation, I can't drive the insights into the business, both for the HSBC operations that we have around the network, but for the customers that use us. And we're really focused on how we surface new insight to those customers so they can capture new growth markets. It could be a new geography, it could be a new product, it could be a new trading partner. We've talked before around at HSBC, we may support a wind turbine farm up in the north of England, but the supply chain goes very deep and is global. Are we helping our customers find the right suppliers to deliver the goods they need at the right price and the right time? So this is really focused for us on the data we have where we can see customers dealing with it through. And then this leads into our first supporting growth pillar, where we spend time looking at our foundations and how we can help our customers grow. The natural tendency is to go to top line growth. Where do I drive new revenue lines, new revenue optimization strategies? But as many will appreciate, you can drive growth from also controlling cost, regulatory burden, or operational challenges, where by reducing that cost base, you can drive your top line growth in a different way. So security is an absolute prerequisite for us and for growth. And we're focused on securing the organization that we have to protect both our systems and our customers across the number of geographic markets that they operate in. I'm focused on both how we use our own data, our payment data, to spot trends on different geographies. Where are we seeing heightened trade at the moment, reacting to some of the tariff pressure in certain markets? Are we seeing supply chain shift because we're seeing transaction data before customers are seeing it themselves across the industry? We can see a shift in payment value, currency that's being invoiced, or new markets for expansion. How do we look at that and how do we actually build that into our product roadmap is a key focus for us. And that's local, that's regional, and that's global. And then we're really focused on the right connections to empower our customers to navigate these challenges today. That might be by speaking to a banker, it might be speaking to a consultant, it might be speaking to a tech provider and a data provider like Databricks. But there is more interest in valuable and timely insight today to drive growth and protect business challenges going forward. So we're focused on that within our own teams. We're about 200,000 people across the 50 markets, but then we're equally focused on bringing that to our customers and our future customers. After 160 years, our business is built on trust and how we operate with the customers that have chosen to bank with us. And that comes down to resilience. How do we make sure that if a customer is making a payment, and as I mentioned earlier, we make about 180 payments a second for our customers, they expect that payment to arrive in the destination that they chose in a clear, transparent, and timely manner. There's complex moving money around geographic barriers, time zones, fraud checks. And we need that resilience and that core investment in our architecture and our global business to scale the operations that we're driving through. And after 160 years, we've learned certain things there that we're bringing to life for our customers now as they look to scale. And then the final bit, and this is the bit that gets a lot of people very excited, and that's our innovation. Some may feel that large banks are slower to innovate. I've seen the absolute best in the industry work at my organization to drive through innovation, and it happens at 2 different levels. We have an innovation labs where teams are dedicated and focused on that next generation technology, that next new growth driver. But what gets me equally excited is where our colleagues in the business that work with customers and systems every day are driving innovation through the processes that they own. If they can spot something that we can do quicker, better, or faster, that's still innovation. It means different things to different people. And particularly the role I have now as head of global payment solutions for our innovation banking customers. This in the US is a couple of year business set up within a 160-year organization. And we're fortunate to work with some of the fastest venture-backed organizations growing globally. And we're seeing a new demand, an increased pace of expectation on systems, on digital channels, and on payment journeys. And we're working really closely with our customers to collaborate on what they need to drive that innovation through that business. We need the technology in place. We need the data in place to drive this. We often say that ideas are easy, execution is hard. And this is where we spend time with our partners and with our teams to just make sure we're really bringing this to life for everyone to benefit. And for my final slide, I just want to share a bit more around HSBC and Databricks. And I sometimes joke with colleagues that we have a long-standing employee base that have spent 10, 20, 30 years at HSBC. And this is our greatest strength. It's why customers bank with us. It's how we navigate a complex organization. But I often also joke that that can at times be our weakness. If we've got colleagues that have worked for 10, 20, 30 years on a similar project, we have blind spots. We don't know what we don't know. And that's where we're really focused on our strategic partnerships externally in market, like with Databricks here. So as a reminder, if you'd like to understand more on with Databricks' website, we have provided a customer use case where we've worked with Databricks specifically on our mobile app for our retail customers. And we've talked around how we have consolidated multiple data lakes into a single data lake. We've talked around how we can now do tasks in seconds as opposed to hours. And we've talked through a lot of improvements that we've seen through our engagement in our apps. Customers are spending more time with us in the channels that we've built to help fulfill and enrich their financial lives. And that's by working with partners like Databricks. So one thing I would mention is I mentioned earlier, I'm in the business. So actually what's really exciting for me is when I see the work that my teams do in IT, data, and some of our tech and transformation teams, I see the benefits of the work that's been done when it's surfaced into a customer. And when we get the NPS surveys back, the verbatim feedback about how we've improved digital journeys, it's by working with our third-party partners in addition to HSBC's internal resource. So we have built a cybersecurity advanced analytics platform based on Databricks, and this houses petabytes of security data. And this is important because it lets our team analyze, measure, and build tooling that enhances almost every aspect of our operations globally. So thank you, Kim, to the team for all the help that you've given us for a number of years, and look forward to doing more to benefit our mutual customers in the future. I'm really happy to take any questions if I haven't run out of time for us.
No, that's awesome. Well, thank you, one, for taking the time to sit with us. You just unpacked a lot of things. And so I just want to be kind of the little investigative reporter here. Um, just specifically, if we could just start with maybe you mentioned open banking earlier as kind of like a key trend in an area of focus. And I'm just curious, like, what are you kind of seeing or how are you seeing open banking kind of changing the customer experience on your end?
So I think what's fascinating with open banking, and I touched on some of this earlier, but just to expand a bit further, different markets around the world have approached things very differently. Arguably, the UK government were some of the first adopters on open banking principles, and that work has then been inherited or perhaps shadowed in other markets around the world to learn from some of the experiences. At its core, open banking, and just to stress, it's a consent-led protocol. So in the UK, as an example, customers are choosing to share their bank data with third parties. It might be into an accounting solution, it might be into a customer relationship management solution, or the most popular use case is often what's called a PFM, a personal financial manager. So to bring this to life in the UK, I've seen a lot of both innovation and adoption really flourish when consumers or businesses are able to bring a lot of complex financial terminology and information into a single place. To bring this to life, it's very common now to bring in various bank account balances into a single view. What is my cash flow forecast? If I'm a small business, when am I actually getting paid? When are my invoices due? And this wasn't something that was previously available. So under the APIs that have been built and the concept of open banking, customers were expecting to share their data with multiple third parties to be able to drive growth. And this is particularly key when customers go international. Because while UK and Europe have done certain things, it doesn't necessarily link to the way this has been approached in the US. So I joked about when I landed and expected to share my bank data with a third party and couldn't actually do it. And I reverted back to those awful penny tests where a couple of pennies or cent transactions hit my bank account. 2 days later, I joked, I had to log back in and verify my account. That's different with open banking consent journey, where that's a few seconds to bring in 12, 24 months of financial data. So it's changing both how data is shared and it's used, but it's also changing where data and financial journeys are happening. Historically, that was in primarily in a bank channel, your desktop, then your mobile app. Now there's a proliferation of fintech channels sitting on top, providing enriched services. So the banks are working on building those solutions. And then you've also got new entrants coming to unlock value for customers. So just a couple of thoughts. And then the final bit I'd say is in the US, I've seen more focus on account information. But in Europe and the UK, you've seen much more on payments. So actually, we've seen some customers, and HSBC has launched something called Pay by Bank in the UK, where a customer can effectively pay from their bank account as a bank to bank real time transfer, as opposed to using a card. And where this is helpful for some merchants is it's reducing their interchange fees, where a bank transaction is settling without the need for a card network. Adoption is still growing, but I've seen that take off more in Europe and the UK than I have in markets like the US at the moment.
I'd like to pivot our conversation a bit, and with the question about, say, innovation. A lot of firms are talking about how they're innovating. HSBC seems to be one of the firms that I see doing it actively based on what you described with the innovation labs, as well as customer driven innovation. I'm curious as to how you even thought to start a roadmap for getting customer feedback to drive that kind of customer led innovation approach, and kind of what maybe didn't work, because it all sounds so fantastic, but at the scale that HSBC runs, I'm curious as to how it all got started and kind of what went wrong or what may have been an opportunity to see you today.
That's a great question. I think will be on many people's minds. So I was lucky enough to lead our innovation business in the UK a couple of years ago. And that actually came from the 5 years I had with HSBC in San Francisco. So from 2015 to 2020, I was on the ground seeing a significant step change in the industry. And looking at what I was seeing there and how I brought that into my own organization was something that I was very passionate about. So the first thing we did is we defined innovation. And change is quite unsettling for some people. I find it very exciting. I do think I'm lucky enough to work that, but some people are quite uncomfortable. And we often do remind people that the pace of change today is probably the slowest they're ever going to have through their career. So trying to sort of get comfort and education around what it means and why is a really key step on the journey. And then we defined it. So innovation for HSBC means creating real scalable solutions that help our customers navigate an increasingly complex world. And this just helped really focus everything that we were doing. So I'd love to sort of touch on this just a little bit more, if it helps everybody, because this is hard. And I think the first thing that we've really tried to do was embed innovation across the whole organization. Yes, we have the labs and we have a great team working on things. But like I mentioned earlier in the session, it's about everybody in the business looking at something, not walking by something that's not quite right. How do we make something quicker, better, faster to make sure that my organization, which started 160 years ago, supporting an entrepreneurial culture, can still do that today under our innovation banking business? So at its core, we have trust and reliance. And I've touched on this several times through the session as well, that customers, while they like an innovative product or something new, they still want the trust that the organization is behind it to make sure that it is safe and it will protect what they're doing through the journey. And if we look at something like fraud in the UK, there's a significant increase in fraud with some of the authorized push payment work that went through. So what we actually did at HSBC a couple of years ago, we got some colleagues together and thought fraud is an impact not just on HSBC, but on the whole market. What can we do about it? And a few colleagues working with another partner worked with something called our fraud awareness app. And we built an app in the public app store for anybody to download. And what it did is it brought through live industry trends of where we were seeing heightened fraud activity. And when a customer signed up, they input, a customer or any user, they input their industry and their job role. So what we could see is if someone was in the garment sector and they were in the middle of England and we saw a spike in certain fraud, we pushed a real-time update to say, we're seeing more happen in this space and you might want to be careful. And then there's always that call to action. Okay, you told me. No one thinks fraud is going to happen to them until it happens. So what do you do about it? So within the app, we then put through core contact areas. If you're with HSBC, this is who you contact. But if you're not, go to your bank or here's the number for the police. So it was one thing where an innovation topic on fraud perhaps wasn't what everyone expected, but it drove real value to the customers that we had. And then we were really keen to share that insight across the industry as well. And then when I pivot and think specifically for transaction banking where I am, machine learning and AI has made deriving insights and data quicker and more accurate. So I work with treasurers who need to update their businesses and their boards on what's happening. And it wasn't too long ago that was still Excel sheet spreadsheets, 30 days post closing. So we're now working on real-time treasury, real-time payment insights for our customers where they need to understand where their money is going to be tomorrow or what happened in a particular market or a currency exposure. So cash flow forecasting is a big focus for us in innovation. Exposure analysis. Where is my money? Who is it with? How safe and how stable and who am I dealing with? short-term investment strategies, or looking at payments and receivables solutions. A lot of people now need to collect in multiple currencies, in multiple geographies, and that's very overwhelming for a number of businesses. So we're trying to bring that through into everything that we're driving through. So there's just a few things that we've done. Kim, happy to expand on anything else as well.
No, I love it. We always love hearing about the School of Hard Knocks and how firms actually get started because as listening to you, it's always not as easy. And you really have to have change management. You really have to have buy-in, and most importantly, upholding trust for your customers. That's how you got to be a 160-year-old firm. So I'd just like to thank you, Will. We appreciate so much your time. And for our audience, please keep using the chat for your questions. Will's going to hang out and respond to some of your questions as we go along. And then I'd like to move on to our next segment called Kickstarting Your Initiatives with Databricks Partners. I'm excited to hand the mic over to Antoine Amen, who's our Senior Director of Industry Solutions at Databricks. Antoine is a wizard at analytics and distributed computing and braves the Arizona heat for a daily data inspiration. I'm joking. It's very hot in Arizona. Some say his Spark skills are as hot as his hometown. Whether it's astrophysics, Spark, or surviving triple-digit temperatures, Antoine's your expert. Antoine, take it away.
Hi. So driving growth is ecosystemic. What does that mean? It means that just like in biology, where organisms cannot live without one another, financial services cannot live without sharing information from one organization to another, from one business to another, will not live without connecting the dots from different platforms and different providers and core banking system and core insurance system. So my name is Antoine Amend, and I run our ecosystem and partnership at Databricks for financial services. And I want to highlight a few partner motion as it pertains to drive growth initiatives around banking and payments, insurance, and cap market, but also share my perspective of what we're seeing in the market around how data vendors and providers are building more differentiated products. So if we look at hyper-personalization use cases in banking and insurance, we have to rely on data vendors providing information around behavioral segmentation, around customer 360. And those providers might be sharing data directly in form of table through the protocol that we call delta sharing. That makes it so easy that we no longer have any ETL processes in between, right? So the like of Axiom or Amperity, or DNB data, Dun& Bradstreet, to bring firmographics and risk-related data to business customers. We also have partners who build entire motions and ecosystems and products atop of the data intelligence engine, building a customer data platform, a CDP, because there is no better place than a lakehouse to start bringing that information together in one place and having Unity catalog to govern them all. So Epsilon or Action IQ or HighTouch. So we have many different of those different partners. This is just a subset. But when it comes to those campaign management and outreach and personalization use cases, I can only invite you to have a look at our data intelligence for marketing, which is a new offering where we started to catalog and capture and categorize all the different vendors, partner solutions, all the way to SI who build expertise in those specific motion. When we extend that to capital market, this is no longer different. The world of capital market lives by sharing information from market data infrastructure provider, like FactSets and S&P and Bloomberg, bringing data directly as a delta share, combining that with alternative data providers that you may have on marketplace around footfall traffic, around satellite imagery, around news scraping or social media, and product built atop of our platform that you can use directly to streamline some of that ingestion process, like Omega Point, for instance. So we have a lots of different technology partners and build on motion, as well as data providers and partners who bring that information over to you in a seamless manner for you to drive investment analytics and alpha gen type of use case. But if we extend what's happening in the world of market data infrastructure, we're seeing that you, as customers, are bringing the right pressure to vendors to build more differentiated data product. Because if we take an example of driving alpha by getting ESG rating, there might be 100 places out there where we might buy this similar information. So what will make fact sets more compelling than S&P or S&P more relevant to fact sets and others? Those are just examples, but that really drive that competitive pressure of building more differentiated product. And no longer just sharing data or selling data, but sharing insights and connecting their data, their expertise, their data product directly into your workflows. And that's been accelerated massively lately with the fantastic technical achievement of GenAI and agentic AI systems. S&P, for instance, will not be just sharing data, but metadata associated to those feeds so that it can better be interpreted by any agent to run text to SQL capabilities and integrate and interact with their data in natural language. Fact sets will no longer just be sharing data, but they have built expertise and experience throughout the years where they can start parsing and chunking and embedding and vectorizing and eventually sharing vectors of transcript that you can use into your agent right away. Those are just simple examples. But the more we discover that, the more we realize that the GenAI capabilities is offering new monetization strategy, new data delivery vehicle, and building those differentiated products, forcing providers and partners to make sure that their product become more relevant for you to start bringing to your workflows. As we said about sharing vectors or sharing metadata, all the way to connecting APIs directly as an MCP server, or sharing no longer one specific data set, but a data bundle by data domain, or even sharing models above and beyond just sharing data. And that becomes critical for drive growth initiatives where two organizations could share information in a clean room environment and building models that they can monetize and share downstream to other processes. And we see really how GenAI is massively accelerating that openness and that interoperability of our ecosystem. To put this in perspective, this is just an example of how we can start bringing different data sources together and reducing that friction, those number of steps that exist. So in this example of financial data for capital market, I might be merging first-party data that I ingest via Lakeflow connector onto my data intelligence platform, that I can merge right away with market data coming from Bloomberg, directly accessible via a Genie API, that I can further extend with unstructured data such as corporate filings and news coming from fact sets that get interpreted directly as a vector in my vector store, all seamlessly integrated with one agent. So one agent with multiple tools or multiple agents that can get integrated together. And this is exactly why at Databricks we spend so much time in making sure that you get the best experience and expertise of building those enterprise agent through our agent brick capability. So if you have any question, we would be more than happy to sit down with you and our account team and make sure that you can get the best of your partner ecosystem, who most likely have built some capabilities that are natively available, accessible in a Databricks environment, things that get much easier now at an age of agent and GenAI capability. Thank you very much for your time and your attention today.
Thank you so much, Antoine, for your wonderful presentation on everything partner ecosystem. We've sure got a lot of actionable next steps ahead of us. And thank you all for joining us for this webinar today. It's been such a pleasure hosting such amazing speakers about such amazing content. As we wrap, please look to your inboxes to fill out a survey and let us know how we did. with this event, as well as what we could do or what else you'd like to see. We're always looking to improve and also bring content that is relevant to you. And remember, the conversation doesn't stop here. We have a number of opportunities for you to just get started with us, starting from a free trial or meeting with one of our account reps to talk about what your organization's working on. We're here for you. Stay curious, stay cool, even if you're tuning in from Arizona like our pal Antoine, and keep the momentum going. Thanks again for being such an amazing audience and have a fantastic rest of your day.